Hello, folks. Welcome to Pro Trader Strategies. We're an educational company, so if you want to learn about the markets and or how to trade those markets using options specifically, hit that subscribe button right there and there at the bottom, and make sure that you click on the bell so that you get notifications when we're doing these videos. Yeah, every week I'm trying to do a market commentary during the day where I talk about my trades. So make sure you got that notification when we're talking about them. I might pop in here and start talking about the market, so you'll get a notification when we're going live. And finally, we do webinars on Thursdays. At the end of this video, there's going to be a link there that you can click on so that you can join us for these webinars where we are drilling down on different option components and when, where, and why we would use a specific strategy for that underlying. I'm going to talk about that and how to spot those opportunities in the markets. Comment over at the side there. Make sure that you guys are participating in this so that you guys will learn from that. I want to make sure if you have a question, somebody else probably has that same question. So please ask it. I'll make sure you're clear of concept. And if you're watching it on tape delay, I'll circle back around for you folks and make sure that I answer all your questions. Finally, smash that like button for me. It really does help out. All right, let's get on with it. I'm Eric Wilkinson. I'm going to be hosting this. Something I want to talk about. China is all over the news right now, and I kept forgetting early on in the week because it came out on Sunday night. We had Monday off, and I kind of forgot about this, but the PMI numbers, we've been talking about these for the past couple of weeks. Anything above 50 is expansion. Now, we've been seeing expansion across the board over in Europe, here in the United States. Well, one of the things I forgot to talk about was China's PMI. It came off a little bit. It just slightly above that watermark of 50, coming in at 50.3. It was expected to be 54.8. So as they were expecting it to come off, albeit just a little bit, they weren't really expecting this much of a pullback, all right? And then that was the first thing. I don't like to really talk about China's economic data because a lot of time they pump them to the upside. But it is particularly important when you see these numbers come in worse than expected because they're probably pumping them a little bit. They're still falling. So that was the first kink in the armor. We did then circle back around with the PMI numbers from Europe, and those numbers were pretty good. That gave us a little bit of buoyancy, but now we're circling back around to this China theme again, where they are signaling some more slowing, not only with that PMI number, but they also started talking about the deal flow into China is down by about 50% this year. That was the catalyst to really start getting the markets to see some weakness here. Now, if we go further on and take a look over here at crude oil inventories, we saw another drawdown over what was expected. It was a drawdown of 6 million, almost 7 million, 6.9 million barrel drawdown, expected to be a 4 million barrel drawdown. Now, early on this week, you guys heard me talking about OPEC meeting all this week. We were expected to see about a 500,000 barrel increase in production. Well, those meetings have gone a little bit longer than what we were expecting. As a matter of fact, we still have not gotten a decision. We were expecting that decision like on Tuesday, so still not getting a decision on production. That might be holding up crude oil. The weakness is really going to be around this slowing of the economy. Are we going to see another round of slowing? I'm not seeing it here in Arizona or really across the United States so much, but in Europe, we're really starting to see some slowdowns as people are starting to be concerned about this new variant of COVID and that causing another slowdown in the economy. Now, we haven't really seen that start to happen here in the United States, but in Europe, they're already starting to talk about it. As a matter of fact, the Olympics, are they going to have people in the stadiums? It doesn't look like it. Another reason why we're getting a little bit of a pullback here, all about China. So we're seeing that weakness, maybe a little bit of strength here as the crude oil inventories are coming off and there's still no decision. So that means no supply increases. I was expecting us to start breaking down into the 60 handle, bounce right off of that. As soon as we got basically into that 70-ish handle, very close to that, we started seeing some strength here and near the highs of the day right now. Gold futures are coming off. We're still seeing strength in the dollar, but the gold starting to see a little bit of weakness here. Bitcoin, folks, listen, if you are in Bitcoin, I would be a little bit nervous right now. Remember, China kind of putting the thumb screws on Bitcoin and Bitcoin miners in China. Probably 3 weeks ago, I talked about somebody in China is trying to move 50,000 servers to Texas. All right. So a lot of those things are going to be headwinds for Bitcoin, folks. And on top of it, it's got this little new nickname called Boomer Coin. And the millennials do not really want to be involved in anything that the boomers are. So that could be a big headwind for Bitcoin going forward. If millennials aren't going to support it, it could start really falling out of bed. Now, VIX was higher, much higher. It is higher today. We were in the 20s earlier today. That was when the broader markets were in negative territory. As a matter of fact, we're starting to see all of the markets starting to turn negative here again. As NASDAQ starting to lead the way to the downside, you can see it's down 1.5 points. Earlier this morning, right off the open, NASDAQ was the only thing that was in positive territory, but now leading the charge to the downside, as you can see, Dow Jones Industrial Average off 330 points on the day. E-mini S&Ps down 47 on the day, but still in percentage terms, not quite as bad as what we were seeing there with the NASDAQ. Now, the NASDAQ seems to be leading the charge to the downside as we're getting a little bit of a bounce in the other ones. But risk is to the downside. I think there's a lot of headwinds heading into this weekend, folks, especially with all this China news coming around. That's going to cause some weakness. That's really what the catalyst was overnight in the overall equities. As a matter of fact, they all started seeing that weakness right there at midnight. So maybe E-mini S&Ps were leading it a little bit there. All right. So travel and leisure, I've been talking about this weakness across the board. Las Vegas Sands looks like they could be finding a bottom. Wynn, why aren't we showing Wynn there? Let me get over there, making sure yesterday I forgot to share the screen. I'm sorry, folks. But nice bottoms coming down to these value areas highs. Those are usually resistance on the way up, but they will act as support on the way down. And you can see a bounce there. Penn is something that I own. You can see a nice little bounce off of the point of control there. Something to note is this is going to be, when we're at that point of control, a point in price where the markets, the broader markets, have found value. So it will have a tendency to kind of calm down, as you've seen. Yeah, we started going on this trend line, but we're still right there at the point of control, folks. That's really going to act as more of a magnet than anything else right now. I haven't done anything. I've just, this is my long-term portfolio is in Penn. I do have some long positions in my trading account in Wynn, and those are not the best trade in the world. I have on the the SEP 135 calls in there. Obviously, the market moving against me here, not doing very well on that trade, but I still am in this for the longer term. I have these on long duration calls, so I'm not really getting eaten up in theta decay, still limiting that. Volatility is starting to move higher. That will help me, especially heading into an earnings that could still be on my side. So I've got a lot of levers and pulleys working in my favor, despite the fact that my directional assumption has been incorrect here. So I'm staying with this because I still believe in this reopening trade, at least here in the United States, especially with those casinos. Those casinos are jam-packed full, folks. So if you're not getting out, somebody is, because the casinos are locked down. All right. CRM, Salesforce, is another one where it looks like I have on long deltas in here. Looks like we're finding a bottom. So technical setups yesterday, really bearish engulfing pattern there. I was looking to get out of it, but we are right there again at the point of control. So not a whole lot of concern to get out of this immediately. We start breaking it below 239 or something like that. This Fibonacci, that's where I will start looking to pull the ripcord on this. But at the end of the day, I think we're going to start moving a little bit higher here in the overall markets here. Salesforce has gotten its talons in everything. And then NVIDIA, we talked about this yesterday. I got in a little bit early. I think the market was trading right around 820. So market obviously selling off towards the end of the day. And then a gap down here just below 800 right now. I'm going to keep my eyes on this. This could be a little bit of a bottom here and start seeing some support, but I'm going to hold on to this because I do believe we are going to come down and test the 780 area where we got these little bit of a tweezer top here. That's going to be, let's call it 777. All right. 775 it is. That's where I'm looking for that support area and a little bit of a bounce off of that. I'm going to keep my eye on this today. We're going to talk about this trade in today's webinar on how to set up a synthetic short. I talked about the trade yesterday. I put it on a little bit early. I usually don't do it right before the videos, the webinars, but this trade setup, confirmation, all of those things work too nicely to not throw it in my portfolio, folks. So we're going to talk about this again today, where we really go into the details on this trade. I'm going to hold on to it a little bit longer though. And that's about it, folks. Those are the only things that I'm really looking. I haven't taken anything off of my portfolio or added at this point in time, but I am getting set up for the webinar for today, where we're going to be talking about this specific example, how you can set up a synthetic short and not have the headache of borrowing the stock, paying maintenance on that, and the borrowing costs that could go with it. All of those things are headwinds with shorting a stock, and it is not for the faint of heart. Now, the synthetic short is not for the faint of heart either. It is a high risk trade, but what we've done is created a situation where we are tracking this underlying dollar for dollar. And I'll show you how to do that today. So please join us right after the close at Pro Trader Strategies. You can sign up, hitting that subscribe button and clicking on that bell. You'll get a notification today in the afternoon when we're doing that. So that will help. Also, like I said, comment over there. If you have any questions, comments, or anything else, I will circle back around to make sure you folks are clear of concept. And finally, the last thing I have to say, if you don't smash that, take that. Or take it easy. Bye for now.